so here's the deal. Locally and nationally, inventory is dried up. We all know that. Locally here in Washington, we have multiple offer situations quite frequently, and we've heard similar reports in places like Nevada and Arizona. Now, this has many realtors and LOs wondering if the worst is finally behind us. REO agents around the nation are wondering if their gold mines are drying up, and buyers agents are hastily trying to get their offers approved. Now, to all that, I say, hold on, just a bit. Take a breath. It's gonna be okay.
So let's address the REO inventory concern.
Sure.
After all, this will kill two birds with one stone for us. Now let's be clear. REO folk, don't panic. Agents buying REO, don't panic. Yes, inventory's dried up due to some various reasons, but rest assured, another wave is coming.
You want proof? Well, here you go. Right now, not 5 years ago, but right now we have 11% of mortgages that are currently delinquent in some way, shape, or form.
By the way, 11% translates into 5.6 million homes in some sort of delinquency.
Now, if you talk to local REO agents, they'll tell you they had a banner year in 2011, and they did. They made a lot of money.
Now, keep this in mind. Their banner year 2011 was based on relatively the same number of delinquencies that we're looking at today.
In 2011, we had about 6.3 million delinquencies, and this year we have about 5.6 million delinquencies. Sure, not all these homes will get to foreclosure. Some will be short sold, some will be modified, but most will eventually lead to foreclosure.
Yeah, our ultimate guess is about 4 million of these delinquent homes will actually hit the REO market.
So there you go, guys. Don't panic. More inventory on the way. More inventory for REO agents to sell and more inventory for buyers agents to buy.
You know, I guess it's all kind of in how you look at it.
Yeah.
I mean, some of us are going to be happy with the more inventory, and some of us are going to be kind of saddened by the fact that that more inventory means more homeowners are being foreclosed on.
Yeah, it's true. I, for one, would like to cycle through this stuff as fast as possible so we can finally get back to some sort of normal market.
Hey, speaking of a normal market, take a look at this. Even though we have a ton of new delinquencies coming on board, we are at the lowest level since August of 2008. Take a look.
Yeah, delinquencies are on the drop big time, but foreclosures seem to be steady Eddie. Let's break it down another way for him though. Let's take a look at foreclosure starts versus foreclosure sales. Sales have slowed, which we indicated earlier, but starts are on the rise, which again proves our point. Don't panic, inventory's on the way.
Now, here is the ultimate kicker, or wild card, if you will.
Yeah.
The National Mortgage Service Settlement was approved in early April, and it remains to be seen if and how this settlement will impact the foreclosure process. Could have a big impact, or could be business as usual.
Also, another wild card is the short sale process itself. Whispers are that the banks are finally starting to take this process seriously, and they appear to be in the very early stages of streamlining this process. Now, we have a bit of intel on this, but we aren't quite ready to share this with the general public just yet. And if you guys happen to know what we're hinting at, then please shoot us an email at theguys@theresource.tv and we'll compare notes. And once we know for sure what the deal is, we'll release the news right here on the show.
Hey, have you heard the saying that for every action, there's an equal and opposite reaction?
Yeah, and it's still true today. You know the Fed? Well, they've been purchasing mortgage-backed securities for quite some time, which has kept mortgage rates artificially low.
You know, which I got to admit has been really nice for our clients, both purchase and refi alike.
The equal and opposite reaction to this is very interesting, though.
Yeah, you know, it is. And the long and the short of it's basically this. Due to artificially low rates, thanks to our Fed, the economy right now is extremely out of touch and due for a major correction. And major correction being, now get this, another mini stock market bubble.
Preach it. Now, we touched on this last week, and if you missed it, I would suggest going back to last week's show and watching it. As for today, we'd love to take the time to really explain this to you guys, but we need to keep the show short, so instead, we've provided a link down below to an interview with Martin Feldstein,
former leader of the White House economics team. He basically reiterates what we said last week.
Now, I want you to listen closely to this interview. One, because it's very important and you need to make some plans based off these facts, but two, this interview was given 2 days after our show last week. And Feldstein basically says the same thing that we said. Now, why am I bringing this up? Well, honestly, because of the credibility factor.
This guy led the nation's economic team, and he's giving the same advice and insight we did a week prior.
Guys, I know we're just a small show and don't have the accomplishments of Feldstein, but we take the show very seriously and we respect our viewers way too much not to put out top-notch information.
I hope this proves that we are and have been on the right track. Click on the link below and take a look at this interview for yourself. It's really a good one. Feldstein feels that the stock market and economy are way out of touch with reality and due for a large correction.
And obviously we agree because we've been saying this stuff for quite some time. Take a look at the interview. Let us know if you agree with the RE Source and Feldstein or disagree. Let us know down below and we'll see you next week.